Vancouver.
Vancouver, man, I feel sorry for you.
Not as sorry as you're feeling for me.
Toronto. No, sorry, Montreal.
Yeah. I'm sorry for you too.
Yeah, thank you. I don't feel sorry for Saber.
Yeah.
I wish I was in Vancouver.
Oh, wow.
You're dealing with the heaviest snow these days?
Actually, no, we didn't get a lot of snow. We got lucky, but we got a lot of cold weather. So, like, New York got hit a lot with the snow, but not us. We got maybe like 4 or 5 inches. That was it. But it's pretty cold. It's like minus 20 outside right now.
Oh, man. It's something like 20 degrees outside over here right now. I'm having a jacket on.
Yes, rub it in, Ovi.
Yeah,
He says I have a jacket on. That's hilarious. You don't want to see me going outside, man.
Yeah.
5 different layers.
I remember that. I remember living in North America, New York and Colorado, oh man, and Pennsylvania. It's so cold. But whatever. We can all come together in a screen.
I don't think actually New York and Colorado come close. Like I think Canada is another level. Maybe like Minneapolis, Minnesota is pretty close.
Fair enough. Cold, man, cold. Gotta find your exit plan from North America, generally.
Working on it.
Oh, yeah, fair enough. All right, let's see now. We had plenty of activity during the open a few hours ago. What was this, about 10 hours ago? But you know what? Let's look at the news real quick. I think there's a fair bit going on over there. Refresh.
The oil must be going up.
Yeah. Yeah, there's all that news on Iran and the attack or invasion or whatever they want to call it this time. Well, let's see. We got Trump, very dangerous for UK to do business with China. Okay. iPhone drove Apple's earnings. Was Apple on the move? Did Apple have earnings? Replacement for Powell. Oh boy, this will make things interesting. Look at that news. An hour ago. IRS Treasury, okay, more tax stuff. Yeah, this will make all the domestic market stuff move. Dow Jones, Russell, NASDAQ, S&P, all that stuff. Apple's quite a lot in the news, huh? Microchips. So those are some tickers to look at. Let's see. For downfall, Asia Pacific trade. Nothing different than what we saw 10 hours ago, really. Microsoft Meta earnings. Tesla and Elon Musk. China, okay. But there's nothing new about Iran in the news from, since 10 hours ago. Anyways. But we know there's things that make it move. So let's look at oil then. Here we go. Yeah, so this was for me yesterday, still today for most of you guys. Oil, 30-minute chart. We were talking about this where this was the resistance, then higher lows.
Yeah, are you sharing something?
Oh, I am not. Thank you. Told you it's early in the morning here. Thanks, man.
No way.
I was just looking at news headlines and I thought I was sharing that. Okay. There we go. Cool. You should see the screen there now. So I'm looking here at the oil futures on the 30-minute chart. And we were talking about this earlier, where you had the resistance and then the breakout. All this happened before the New York session opens. This was what, 8:30 in the morning. breakout here, the retest. We saw this on the 1 minute, good area to catch it. But then it came down quickly. And on this chart, I don't have a way of catching this short here. And then sure enough, it got choppy. But also when it came down, there's no genuine way to catch the long. It never set up, even though I was looking at it. And so it just got choppy. So basically, no trade on this. If you had anything, it would have been the breakout here, which would have been, what, 8 or 8:30 in the morning, about an hour before the New York Open. So that's oil. We had gold on the move as well. Gold made that good drop and then rebound. So the drop would have been the simple one. You identify the support, or even here, the support. And then it made these lower highs going in towards the support and the reverse ABCD on the 1 minute chart. And this is a 30-minute chart. We look at a 1 minute, you catch it. And then you're going into the target zones, which are the areas of support here. And what's interesting is I was playing with the charts and stuff around this area, trying to figure a few things out. But what I noticed was, of course, you see the wicks down here starting to bounce off. And you look to the left, once you see the bottom of these wicks, what do you see? It's precisely right there at the bottom of this white candle. Let's zoom in further so you guys can really see this. This was really interesting when I was looking at it. So you have these wicks down here, right? And the buyer stepped in, started pushing it up here. But the place that they stepped in was precisely, look at that, the bottom of that candle. Now, this is an interesting area because you zoom into it here, you see this was a big consolidation. And then this was where the buyer stepped up. This was your breakout candle. And so you can really say, the way I like to see it is the buyers showed up at the bottom of this candle right here. You can put a level almost precisely at right there. And then that's where they were earlier. Sorry, that's where they came in again later, right here. Started pushing up. So this is where you start looking at the 1 minute chart. And I think I took 1 or 2 sim trades on this, trying to mess around with it. Well, what time zone was that? Let's find that. So the 1 minute. About 10 a.m. onwards. This is all PM. Here. Down here. This is what that 1 minute chart looks like. And I was showing you precisely where the buyer stepped in was down here. So you're thinking the buyers can step in again, but you still need a confirmation on this 1 minute chart that it's coming down and it's reversing, going the other way. I don't see any confirmation here. This is just a choppy mess with lower highs even. So if anything, it actually looks like it may continue down. So there's no touching it in this area. And then got in here and it got pretty tight in this area. As in, it stopped doing what it was doing, which was basically making a descending wedge. It stopped pushing down towards the bottom. Instead, it just started consolidating here. And the area of interest for me is really when it broke out of these resistance zones, these more recent ones, right here, smaller scale stuff. So now you're looking here, right? When the price pushes up and it's consolidating here, you can see that this was resistance around this area. You can see the wicks. You can also see that this was the consolidation here, the smaller picture, right? Breakout and retest of these resistance areas right here. You're getting these hammers in place, right? So this, after you're seeing these hammers, this is the area where I'd get interested for a long. I think I took 1 or 2 sim opportunities in this. So getting long above this hammer, putting stop below it, or above the next one, putting stop below it. Those are the ones that make sense. This is how I like to catch a reversal rather than trying to catch it down here, which is tricky. I'd rather catch the continuation of the reversal because down here, the reversal is already happening. Up here, the reversal has happened and you're just catching the continuation of the reversal. And the thinking is, the assumption is that the market will continue doing what it's doing. Who the hell are you to say otherwise, right? So let it prove to you what it's doing. Right here, it's just not doing anything. It's choppy. But up in this area, you can start to think it's moving upwards right about here. All right, so if it's moving upwards, well, let it continue doing what it's doing. Now you know that it's moving up, so you might find a way to catch it up. So you're doing nothing more than catching an ABCD pattern, just going up. You're not thinking of this as a reversal. And that's what I like. So this keeps me out of catching these falling knife situations, which we had a lot of, right? A hell of a lot of that earlier today. So instead of catching the falling knife, let it reverse. They're proof to itself, proof to you that it's on its way. Then you catch the ABCD pattern on a 1 minute. Very simple. So you catch it in this area, and then you're going up back towards where it came from. And you can see you can have targets up in these areas where you have these sellers stepping in. And there you go. This thing will just nicely keep moving and put in another hammer over here. Let's see that. And just kind of slowly grinding upwards. You would have gotten in this area or in this area, and it's moving. So a simple way to do it.
Hello, Avi.
Yep.
That is the exact trading plan that I'm focusing on nowadays. Reversals instead of breakouts, where we get a low established and then we get a higher low established, and we get that ABCD pattern under VWAP. You know, I'm focusing that I want the majority of my entries to be under VWAP, and I'm looking for that pattern and to take it up either to VWAP or hopefully, seems nowadays most of the price action is going to retrace to either high of day or a pre-market high, or if we've got like a SMA 50 or 200 level above. I use the 5-minute chart, so that's what I'm most comfortable with. But yeah, I'm hearing your vibe.
Awesome. That's great. You know, it makes a lot of sense. It's there's a lot of advantages to doing this. Is to, again, wait for the reversal to happen and catch the continuation, and look at the ABCD patterns to catch it, as you're saying. The one big thing is, as we know, when you're looking at reversals, one of the biggest attractions is that you tend to get very high risk to reward. But the hard part is that is trying to catch it down here. You get stopped out a lot trying to catch the bottom, right? And if you were really trying to catch the bottom yesterday without much intelligence, you would have been long over here and stopped out. You would have been long over here and stopped out. You would have been long here 3 or 4 times and stopped out. You would have blown up an account yesterday, really. So yeah, just let it run and then catch it. You can easily catch it in this area. You don't have to catch it down here. You can even think about it in this area if you like. It's a little more aggressive. And then off you go. So you still try and take advantage of that high RVR that you get with reversals, but you're entering with a lot more confirmation when you do it this way, rather than just kind of entering where you think it's a bottom and hoping for the best, which is what most people do. So yeah, good stuff. Good stuff. And yes, the 5-minute chart Evo is doing is, well, slower, simpler, easier. I've tried it. Doesn't really work for me. I used it at some point last year, I think, and I moved away from it pretty quickly. 1-minute charts just give me a little more accuracy. But there you go. Catching a reversal yesterday was a good day for, well, today for most of you.
Maybe a point to make, you know, looking at your chart, Avi, from getting in too early, you could see that first reversal you had, right there, you had like 2 or 3 red candlesticks that were pretty large. Now I don't see volume here, and you know me, I'm kind of a fan of using volume as well. But when I'm seeing the pullback on the C portion of the ABCD move, if I'm seeing big fat red candles, and especially for me, if I'm seeing an increase in selling pressure volume, that tells me the sellers are still in control and they're not going to give up on this puppy. And if I'm going long, that's not my place to enter. If I see an anomaly, for me, if I see a large red candlestick on the way down in that consolidation phase, but if I see an anomaly of less selling pressure, that doesn't make sense, because if you got a big red candle selling pressure, but you have decreased selling volume, that's ringing my bells like, oh, this might be an opportunity here, because this shouldn't be, right? You should have more selling volume if you have big red candles. That's for me and how I trade. So, you know, maybe a stop sign is when you see, if you're looking to trade that pattern and you see big red selling candles, maybe that's not the time to enter. Maybe you want to enter when the size of the candle bodies on the selling side get a little bit less, and especially if you get a little bit of a southern wick below that, which kind of gives you maybe a visual cue that there are some buyers potentially stepping in.
Yeah, well, that's a good way to use volume. I used to use it exactly like that as well. As long as the red candles have heavy volume, heavier than the white candles, well, you know there's still more sellers than buyers, and that's a good way to use it. Simple enough. And to add to that, when you're doing all this, when you're looking for reversals, you're looking at candlestick patterns, you're looking at volume, whatever it is you like to look at, make sure you've got a serious level. If there's no serious level over here, you wouldn't even be thinking about a reversal, even though you may think, yes, the buying volume is greater than the selling volume. If that's all there, it's still not a decent candidate for a reversal because you don't have a bigger picture turnaround point over here. I like the 30-minute chart, but however you get it, weekly chart, daily chart, whatever. If there's no level, there's no reversal. Simple enough. So now putting those elements together, you can get a pretty tight kind of a trading strategy for reversal, right? You've got the volume concept, you've got the candlesticks concept, you've got the whole idea that the market will continue doing what it's doing, so let it reverse and catch it later on its way. So you put in all those things together, now all of a sudden trading reversals is not so risky. And yeah, big opportunities on reversals, always good ones. But another key thing, reversals, guys. Reversals by definition is the thing goes one way and then reverses and goes another way. That's another piece of context I find a lot of people miss out on. This was obvious. It was bearish, and then you're looking at round. But we see it all the time where it hardly goes down a little bit off the open, few minutes, and then people think it's a reversal. That's not a reversal, man. That's just chop. You're trying to catch a reversal here. This is not a reversal over here. It has to be in a trend in one direction, then turn around, which this is the recent action, and it made perfect sense. But yeah, good stuff. Thanks, Evo, for sharing the volume ideas that you're using. That works well. I personally, again, have stopped using it, but doesn't mean that it doesn't work. Yeah, Mohit, go ahead.
Hey, Avi, can you hear me?
Yep, we can hear you.
Perfect. I just wanted to review with you the silver futures trade that I took, sim trade, this morning just before the open on a 30-minute time frame. Just before the open. So you see there, just before the open, we have that big, if you can just zoom in.
Yeah.
Right. So yeah, if you go to the left, you see that resistance.
Yeah. Okay.
Yeah, that right there. So just before the open, the price action tried to break out, and that's when I switched to the 1-minute chart. And if can you switch to the 1 minute there?
Yep.
Let's try to find right there.
So you're up in this area on the 1 minute.
Right. There should be a hammer. I think on your left.
If you want, you can share your screen. Might make it easier.
Yeah, probably I'll share my screen. That'll be easier.
Yeah, silver did a decent reversal as well. And the Qs as well.
Everything dropped at that time. Everything, right?
Yeah. The whole market crashed, basically. But yeah, there's ways to trade this stuff. It's actually very opportunistic. But all right, yep, I see your screen. Let's bring it up here. All right, what am I looking at?
So let me just. So this black line, that's the resistance that I earlier showed you on 30-minute. And this is where it started to break through that resistance. And then there's the 1-minute hammer candle. And that's where I entered long. Now, my question is, like, how long do we wait until there is a confirmation on 1 minute, or this to you is a confirmation?
Now, that's not a hammer to begin with, the way I see it. That candle that you identify as a hammer, I call it a retest. So you have your level, and before it broke out, before the breakout candle, you can see that little consolidation, small candles. Yeah, and then you get the breakout candle, and then 3 candles later, it does a retest where it drops close to the level and then puts in that big white candle. Right.
Okay.
So at that point, to my eyes, the breakout and the retest are complete. Now all I'm waiting for is confirmation that the price is likely to continue moving upwards. For me, that confirmation is just a new 1 minute high. So again, turns out the next candle does give you a new high, and that would be my entry with the stop below the retest candle. And then either it comes down and stops me out, or it continues. In this case, it dropped a little, then went up a little, and then came and stopped out right around the open. And that's fine. So that would be just one entry right there and one stop out, maybe even a partial stop out. So it's not a matter of time that I wait for. I'm just looking at price action. Sometimes it just hangs out there for an hour and then it stops me out. Sometimes, like in this case, it would have been what, 10 or 15 minutes, it would have stopped you out. And then it turned around. And then you can look at the reversal idea. So yeah, I'm just looking at price. I'm not looking at time. I don't want time to be a limitation. Does that make sense?
All right.
Oh yeah, I have a
Thank
question on
you.
this. Since we are discussing, so if you look at the same thing, I mean, at this time you have a long idea, right? Especially, it's very difficult to switch to short idea. You know, it takes some time to switch. So you are stuck in that long idea. So basically, after a few candles, sometime it happens that, you know, it against retest. So it's, I mean, I find it very difficult to switch the context.
Then don't switch it. Don't. and here on the silver price action, I don't think that I would switch it to a short at all, because of the 30-minute picture. It was putting in higher highs, and even this little breakout that we're looking at just before the open, it was what, it was a higher high from the previous high. And now from there, then it's suddenly dropped along with, you know, the entire market. But as far as price action is concerned, it didn't set up for a drop, for a reversal. It was going up, generally speaking. And it did not give you a double top that looked good, or something with lower highs that looked good. Yeah, so I don't think I would have traded silver going short at all on this day. Even though it went, let it go. There's other things you can trade that did set up for the short, but not silver.
Yeah.
So leave it alone, you know. And I wouldn't have shifted my mind. Again, the 30-minute picture is what would have kept me out of just flipping my position, reversing it 3 or 4 times and getting all messed up. That's why I rely on the 30-minute picture. I think it's, what I like about it is it's really big, where you can get bigger picture levels, and it's also small enough where you can really, you know, pick up on higher lows and then lower highs and those sorts of details about direction compared to the daily chart, which is kind of tricky. You just get levels on the daily chart, but you can't really get direction for this time frame of trading. So yeah, here you go on the 30-minute chart on the silver. You can see it's just made higher highs and then there's a sudden drop. I wouldn't anticipate that drop. I wouldn't have trusted it right at the open there. No way. That second drop that happened maybe what, 3 or 4 hours ago, that made sense. That basically went up and then started rejecting. Maybe there I would look at it. I was asleep 3 hours ago, but yeah, you got something there. So again, if you have a strategy that keeps you flipping your mind about long and short based on a few 1-minute candles, it's a dangerous one. You got some work to do. You need more confirmations before you do things like that. And yesterday was a perfect day, or today for most of you, was a perfect day to get caught up in flipping your position. Because, well, it was a fast, aggressive move to the short side. Everyone's overexcited. A lot of people are terrified, especially after 2 stop outs going long, and then everything drops, and then you start to think, oh, is my trading wrong? Is my trade book wrong? Should I think about just reversing? Everything I know is wrong, so I'll just do the opposite. You know, how many times have you guys gone through that? We've all been through that sort of mindset, and it's dangerous. It's very dangerous. So please be careful. Just stick to your trade book. And then to me, that's nothing more than price action. You know, the news is useful. I mean, I'm just looking to see, is there news that could perhaps help a breakout to take place? That's about it. Other than that, it's always candlesticks that make the biggest difference. All right, I'll get my screen back up for you guys. This was a good one. Silver, very good. Good to know how to do these things. There it is. Okay, we got silver here. So let's see. What's interesting is here's your silver, the drop that we're talking about. So higher highs and then a drop. And you could say that this was support. Maybe find a reverse ABCD on a 1 minute going down, but prior to that, it was just making higher highs. I would not trust it. It would be very difficult. Up in this area, maybe, but even here, I don't see it. Again, higher highs and then what a drop. Same idea. Can't really trust it. So let it go. I don't have to catch every move in the market, right?
Right.
Now this is interesting. This is the MES. And let's see, you had here, you got the high, you got a lower high, then the drop. This is the opposite of what silver did, right? Silver was making higher highs. This was making lower highs. And then as it got to that support, here's where you go into the 1 minute chart and look for that reverse ABCD, the breakout and retest, and off you go. This one I would trust. Just because before the big move, it started giving you indications that it's weak. Lower highs right there. No big deal. And let's see, then it went down, popped up, and over here, this is interesting. So you have the down move, and then turned around, went up, but then look at that very aggressive white candle up, and here, I'll show this to you guys this way. See this thing? So here's your drop, and then it turned around, going up, right? But you know that it's just right back. It's gone up, but it's right back where these sellers were very aggressive. So you're being very careful about going long still. Again, catching reversals, yeah. Again, do it only with lots of confirmation. So it goes up. There's a big aggressive move up right into that area there. So if you were long, you would be thinking about partials anyways in this area. Target about 7,000. Then it stops going. This is not a reversal going down. This is just it stops going. And then this candle. This is the fun one. Anyone want to tell me what this whole picture looks like? Well, you guys know this. I'll zoom in for you. We had a drop. Oh, where'd it go? There it is. You had a drop, then pullback, and this reverse hammer. What do you guys think? Everyone knows this one. Come on. This is an easy one.
The seller stepped in again.
Yeah. Yeah, that's there. It's a very good indication of something.
Yeah. Long tail
Trend continuation
to the
down.
left.
The reversal is done.
Well, there's
Continuation down.
Yeah, continuation down. That's right. And yeah, there's 3 different reversals here, but this is more a continuation going down than it is anything else with the long tail hammer. So very simple. You know the direction. It's firmly short. Then it goes up, but it hasn't overpowered those sellers up there. So it's still firmly more bearish than bullish over here. And then what you can call a pullback, it pulled back, what, about 70% of the move or whatever it is. But still hasn't gone up. It's just basically a pullback. And then during this pullback, you're getting a reverse hammer with the top of it having room to the left. And it's happened not after a giant candle. This is your giant candle. The next candle was basically indecision. It didn't go anywhere. Then the reverse hammer. This is the way I like to trade ABCD patterns. In this case, a reverse ABCD. So the A is here, the B is here, the C is right here. And once I see this whole setup with this candle, with this wick, with this room to the left, after not a giant candle, then the new low is the entry. This is a 30-minute chart. So I would look at the 1 minute chart in this case and try to find that entry in this area for that, again, reverse ABCD. Or maybe on a 1 minute, you'd find a double top probably. And then that's a reversal on a 1 minute. On 30 minutes, just a continuation down. So anyways, if you're trading the 30-minute, the entry is the new low. If it makes a new low, the stop should be ideally above it, and you're going down. And off you go. Right now, you're still in it going down. So again, just a reverse ABCD pattern. And this candle and in this context is the key one. And this is straight out of that Naked Forex book. Exactly out of the book. There's no messing around with this. It's precise. So fun stuff. If you see this sort of thing on a 1 minute chart, you can get a really good entry and catch a huge move. Let's actually look at this on the 1 minute. Let's see what it did up here. So this is where it is. This is the 1 minute chart of that 30-minute activity we saw. So pushed up. And when did that candle close? What time? Closed at 5 p.m. So we're looking at 5 p.m. right on this line here. After that, you're looking for the short. Yeah, you can see this reverse ABCD right here. Comes down, and here's it goes sideways. You may think of an entry down here, perhaps as the break of this support down here, or let it break. Here's your retest area, maybe down here, right? Would have got you once, but then you're getting these lower highs, and as it breaks the support right there, that's your descending wedge idea. So your entry might be in this area with a stop just above it, and whoa, wow, it gets stopped out again, but you have this major candle after that one, definitely taking it short. You can see on the 1 minute, it's a little tricky, but you can get it. And they take 2 stops, and off you go. You get plenty of move. Or just take it on a 30-minute, and it's a much wider stop, but you're still getting an RVR. So many ways to do this. Personally, I would do it on a 1 minute. I would, where is it here? As that 30-minute reverse hammer closed, I probably would have taken 2, maybe even 3 stops trying to get into the short. But you get one of them to work, it's 10R, so it's okay if you take 3 stops trying to catch it. Probably still wouldn't take a partial. Somewhere here. And this is the 23-hour market, guys, so you don't have to worry about time. The market is not closed. You can see it's open. It's 9:30 p.m. in the United States, in the Eastern time zone. And you can put it on. So there you go. Fun, huh? What about the cues? Similar idea, but not the same. Is it? No, it is. That's the same thing. Look at that. There's your reverse hammer. That reverse ABCD pattern right there. Same idea. This is the Russell 2000. It's been a mess. It's been really hard to trade. Putting in moves, but I don't see how you can catch this. Just the 30-minute chart would keep me away from it. So no fun there. Then what is this? Oil. Yeah, I'm not sure what to do with oil. And we looked at gold and silver. Yeah, so there you go. Had an interesting day in the market. Lots of opportunities. But again, you got to still have a trade book. Well, just a strategy and your indicators of when not to touch it. It's like we were just saying, you could get long and short 3 different times yesterday or during the day and get totally messed up. So wait for it to really earn your risk. Otherwise, don't risk your money. It's not worth it. What do we got here? Scott, I haven't seen you in a while. Welcome. Tests set up. What do we got here? Amal, could you share some things you do or did outside of trading that has helped you improve your trading performance? Oh my God. Now you woke me up. All right. Good news. We've had a couple of people just recently join our little group here who have some really good expertise on things to do outside of trading that truly improve your performance. I've been talking to them, and they'll be giving us some of their insights very soon, probably the next week or so. But to put it simply, things that I've done over the years, well, I could say the one major thing that was a big 80-20 thing, really, to improve my trading was to just clean up my life outside of trading. So about 4 years ago, I think it must have been 4 years now, I was in a marriage and I got out of it. I filed for divorce and all that, and got rid of that environment so that I was in. That cleared up my mental space and really just removed what was a bad influence in my life. So suddenly, you know, it's amazing. The energy around you, or the energy that's in you now, is so different and much clearer and cleaner. It wasn't all, my life wasn't chaotic anymore. And that reflected in my trading. It's amazing how that works. You got to really be protective of your existence, put it that way. You don't want to have rotten apples around you. You don't want to be in a rotten environment. Those sorts of things. And that was so profound. It was almost instant, really. Amazing how it happened so quickly. I didn't really work on my trading that much at the time. I was too focused on lawyers and divorce and child custody and all those sorts of things. But my trading improved tremendously as all of that just got worked out. So that was huge. That was one very, very, very 80-20 thing. Be very protective of your space, of your existence, of your emotional space, of your mental space, of your time, and who deserves your time, who doesn't, those sorts of things. Fix all that. And it was funny, it reflected on my charts. My charts got cleaner. I started removing all those indicators and look below what it looks like now. I don't even have colors on it. And everything improved. It wasn't a really conscious trading decision to improve my trading. It was like my life sucked and I knew I had a problem I had to solve, and I solved it. So that was that. Another couple of things outside trading that have also come into my world in the last 3 or 4 years has been physical exercise, just keeping fit, just simple physical fitness, whatever that is for you, whether it's a sport or it's a gym routine or whatever. Just keeping fit is really important. The way I see it is the body is a tool to work on the mind, to keep the mind sharp. So you use the body, really get your heartbeat up, start running, use your heart, your lungs, your legs, your arms, whatever. Even not necessarily just exercise, but competitive sports, go and compete in something active, running or hiking or baseball, whatever you like, I don't know. And that itself is also quite beneficial to your spirit and to just the way you do things. It's amazing how your perspective changes, your energy changes, you're just more optimistic about life, all those sorts of things. So about 4 years ago also, I think I really decided to finally get in shape. And that hasn't changed till today. I had the accident now, it's been 4 and 5 months ago. So since then it was more difficult to stay in the gym, but more recently I'm back to it and still keeping fit. That's been amazing. It keeps the head clear. And it also, of course, keeps your body healthy, which you need more and more as you get older. But keeps the head clear. The body really is just a tool to access the brain and the mind and keep it fit. It's really important to get the oxygen flowing to your brain, all that stuff. Another thing that I did, that's been a little bit longer, probably the last 6 years or 7 years or so, is meditation. And that's still here with me. Even just 10 minutes a day, whenever you find the time, it's insanely powerful. That is all about building awareness inside your own mind. So you're not going through life like a zombie. You want to go through life being aware of your thoughts and your body and your mind. It's kind of like you want to be in a space where you're always watching a movie, and you are the character in the movie. So you're in your room right now, but you're actually watching the room. You're seeing the room. You're watching the scene with the character in the scene. Bit of an outer body kind of thing, but that's what you want to achieve. And you want to try and get into that state and stay in that state all the time. With meditation, that's what I practice. That's what I call mindfulness. You're just aware. You're not fighting what's coming into your head. All these random, crazy thoughts, good and bad, that pop into your head and go. You're not fighting them. You're not engaging with them. You're just observing them. That's mindfulness. Really just observing them come and go. And I think the more you practice that, the more you become aware or self-aware, and the more being aware is a natural thing. And then when you're trading, oh man, that is incredibly powerful. That's how you don't go on tilt. When you get upset and you want to revenge trade or whatever, all those trading problems. You're trading and you're actually aware, like, oh crap, right now I'm pissed off because I just lost a few trades and I know I shouldn't have entered those trades. And I feel like revenge trading right now. You're actually aware that you're thinking these things rather than just kind of standing at your desk and being all freaked out, which is what most people do when you're not self-aware. And then when you're freaked out, then you're just hitting buttons and over trading even more. So meditation is very powerful. So put those things together. And I've put those things together. And I got to say, I haven't tremendously worked on my trading itself, the technical trading side of things. Not much. I read a few books here and there and took bits and pieces out of these books. Like the Naked Trading book was probably the most profound one as far as technical stuff is concerned for me. But I mean, the whole thing took what? I just read a few chapters from it. Maybe it took like 4 hours to read those few chapters. So in the last 5 years, that's the only work I've done on my trading is just 4 hours, put it that way. And, finding those results. But you can see the results come from other places, right? It's funny, one business mentor of mine, when was that? Wow, 2016 or something. This was years ago. One of the key things he said was, people don't have business problems. People have life problems that reflect in their business. And to say the same thing, he said, it's how you do one thing is how you do everything. So focus on those things in your life, and then you'll find that your business it'll find its own solutions. It really does. It's amazing. So it's all, again, just a matter of energy flow. You sort out your energy, and it'll flow onto your trading screen pretty quickly without too much fuss. So, trading doesn't have to be difficult or complicated. Most people think they can't trade, and they go running around between indicators and strategies. That's rubbish. That's not going to help you. I promise you. And that's when, again, you start doing that, which is what most people do. Then you have guys on the internet trying to sell you, here's a new strategy, here's a new indicator, all that rubbish. Fix yourself, and your trading works itself out. But once you fix yourself, it's not like you fix yourself and you're done. No, you got to maintain it. It's like you got to stay healthy in your mind, in your body, and in your environment. You got to maintain the healthy spaces that you created. And really, trading is not difficult. Technically, it's the easiest thing in the world. It's just the emotional thing. So now you got to, step up emotionally, clean yourself up. Think about the highest performing people on the planet, athletes, easy ones to look at. They don't just show up on game day and perform, right? They're training for those 364 days of the year. They're living really well, protecting their time and space and health and all that. And then they show up to play on game day, and they're champions. Well, it's because it's nothing unusual for them to be a champion. They're a champion every day in their life. So think of things in those terms.
That's a good point. That's a question I have for you is like, from the emotional side, how do you not like marry a trade or marry a trade idea to a point where like, a couple minutes you're taking, you take 1 or 2 or 3 stop outs. Like, when do you like, damn, this is not working, I should stop taking this trade? Because that's a huge, roadblock. Like you said, trading is not that hard. You put levels, and you can see price reacting to those levels, and you take a trade based off your trade book. But sometimes I feel like I go down this spiral of marrying a trade or marrying an idea of the trade, and that's the emotional spiral that comes out of it. So how do you not stop trading, but how do you just say, okay, this is not working out?
It's because of guys like you that divorce lawyers make a lot of money.
Come on, man, knock on wood. I got 2 kids and a wife that's happy, so hopefully not.
Good, man. No, good for you. I was just making a joke, man. Family's important. Family's very
Yeah,
important.
I'm only trading with a 401k, only one account.
Good. Well, you got
Just
those risk management in place.
No, just joking.
But the thing about marrying a trade, actually, the whole thing is I've done a whole section on it in my course, which is we have it in our YouTube channel. But to make it very simple, the way I do it is, again, 30-minute candlesticks. If the 30-minute candlesticks set up and the trade is there, then I'll take it 1 or 2 or 3 times. And if it stops out every one of those times, that's okay, as long as I took the setup when it was there. And on the other side of it, you have to take your setup when it's there. You have to. There's no messing around with that. Now, when that picture changes, now in one 30-minute candle, you have 30 minutes. If you get 3 setups, I think that's unusual. It's not normal to get 3 setups within a 30-minute candle. Sometimes you do. Usually, at the most, I'll see 2. And if I take both of them and stop out, no big deal. And then the 30-minute candle will close, and then I'll look at the 30-minute picture. Now, what does it look like? Is it still that same picture, or has it changed? Most likely, it's changed. It's likely turned into chop, or it's reversed and gone the other way and set up for the other direction. In that case, okay, now I have to zoom into the 1 minute with a totally different perspective. I have to think about the short now, not the long. So I just use a very simple technical thing in this sense. I just look for the 30-minute pattern setup to tell me whether it's a long or a short. And then I need the 1 minute picture to also set up in the same area for that direction. and then I'll take it. And if it's not there, it's not there. So it's rare that I'll get into 3 trades within 30 minutes. Very rare. 2 seems like the more normal thing. And even right here, what's on the screen is you have the oil futures 30-minute contract. Very simple. You have the resistance here. Here you get the breakout, and it comes back and retests and goes long. Now from here, within this 15 or 30-minute period here, you may find 1 or 2, maybe 3 entries at the most on that 1-minute chart to catch the long, and off you go. And then since it came back from there, it never set up for a short or a long. Look at this. Nothing here to tell me go short, go long. The only opportunities were here in this tiny little time frame. The whole day, there was nothing else. So there's no over trading here. There's no getting married and getting divorced. There's none of that here. This is just a simple setup. It's either there or it's not. And once it's not there, there's nothing to do. Whether you lost those 2 attempts or 3 attempts or not, doesn't matter. If the setup is not there, you're not there. Go do something else. Put an alert on some level that you like, and whenever it buzzes at you, come and look at it later. It might buzz at you a couple days later when it gets to that level. So
You don't like that 30-minute candle after the big red one that came down and retested? That seems like a good. Yeah, that one right there. That says Avi all over it.
This says over trading amateur all over. Man, come on. No, this is tricky because it came down very aggressively, right? Firstly, this red one was fast. Here, look at this. Look at this picture. You had the breakout and it shot down fast. This wasn't like coming down nice and gentle and bouncing off smoothly. No, this just shot right down. You want me to trust that it's going to go against all those sellers very quickly right away? It's a little subjective, but it's just too much doubt for me. Way too much doubt. Also, don't forget, your resistance area is here. Look how far that went in. All the way down here. Very tricky. Very tricky. There's so much doubt amongst this one that I won't. To show you one that makes more sense for a reversal, sorry, for a retest is, I think, here. If you look at this resistance, then you get a breakout about here. This one printed higher. And let's see, where's a good breakout? I think here. This one was the first genuine good one, where it printed bullish. You can trust this with that. It's actually now looks like it's ready to go away from that resistance, this white candle. Then the next candle comes down and puts in that hammer. You could almost call this a retest of this breakout area. This is much smoother, much easier to trade than this one. Look at this, go and come, no way. How about here? Yeah, this resistance here. This is your big breakout candle. And look at the next one. This one is your retest. Looks like fun, right? I did that again later. You're getting all these little wicks down here, higher lows in this area. You're getting retests in this area. This is where I may look into a 1-minute chart and find where it's bouncing off, finding those higher lows somewhere here and try and get involved. Compared to this thing it's hard to even call this a retest. This, you could say, look at it as this is your resistance, here's your breakout, and the move is done. Once the move is done, you're not looking for a retest anymore. It's already done. It's over. And a lot of times, it happens. I'd say it happens about 30% of the time, where the breakout happens and does not give you a retest. 70% of the time, you do get a retest. So this is one of those situations where it did not give you a retest on a 30-minute chart, right? So just have a way of identifying that. Basically, just move so aggressively. Why would you want to get involved when the candles are just jumpy? You know, it's much easier to trade this stuff. On this stuff, you can even trade just the 30-minute chart. You don't even need the 1-minute chart. The candles are so small. It's easy enough. You can get an accurate enough entry to get good RVR. So think of it in those terms. What else do we have here? Yeah, a little tricky sideways activity. There you go. There is a time when the retest is not valid, and that is when the move has already happened. Simple enough. Cool. What else we got here, guys? Amal, you liked it? Cool, man. You're welcome. None of this stuff I'm sharing is new. You guys have heard me talk about this many times. It's all recorded as well, so it's all there. It's even in the course. Yeah, everything's there.
Yeah, it's just good to see live analysis from you. Just like small things, like, okay, that's a big drop. I mean, I probably would have taken it. Probably would have lost, but so it's good to know. Like, okay, that's something that you use to mark out. Don't take this trade. Things that you've generated over years of doing this trading plan, but I've never added that. So maybe I'll go back and look at my trades and see the ones that didn't work. Was there a big drop or a big buying from on the short side, and see if that's part of the trade book that I need to add. So this stuff is, I mean, these Candlelight sessions are gold.
Cool, man. Good. I'm glad you like it. It's helpful. Good. I'm glad to hear that it's worth getting my ass out of bed before sunrise for you guys. So.
Yeah, even though you feel like you're probably repeating the same thing, it's not. It's like every time, I don't know, maybe it's just people are different, but every time you talk about something, you may say the same thing or you think you're saying the same thing, but maybe we take one piece from that thing that's stuck with us that we can go look at it, and then next time we have this conversation, there's another piece, and it just keeps adding up until we are millionaires. So I appreciate it, man. This is
I can't agree more. Whenever even you repeat, for me is new. You might have told it like 100 times. That's what we mentioned.
I feel excited every time you talk the same.
Oh yes, absolutely. There's no doubt about
it. All right.
These sessions are gold.
Good, man. Well, I'm glad it's useful. Happy to do it. I enjoy doing it, so I'm glad
We're just
you guys
a bunch of monkeys, man. That's what we are.
For a bunch of monkeys, what am I, the chief monkey? That's even worse.
I've been watching a lot of Lion King with my son. You're that old monkey that puts the dust on his head. I'm talking about. I don't know if you watched Lion King, but
Lion King, the old one. I mean, I've seen the old one.
Yeah.
Oh gosh. Well, either way, as long as it all helps, it's all good. Happy to do it. It's all fun for me as well. So. Cool, man. Cool. What do we got here? Evo, the retest is more than 60% fibs, no longer an entry. Okay, so Evo's got a way of identifying when it's a breakout or a retest using fib levels. There you go. Al, you're learning patience. Very good. Best thing you can learn. Most important thing you can learn. Patience in this business. Actually, in any business. It's just these days everyone has the attention span of a goldfish. So patience is important. Yeah, Nassim, go ahead. What you got?
So my problem is most of the time my problem is I don't know, or rather have trouble setting the right target. So for example, today I took the micro E-mini futures for reversal. Like you said, I tried a couple of times and I succeeded on the third or fourth time because I was trying to catch the bottom, of course, which I have to stop doing. But then my target was around 69.58, and like I did not see it coming that it would go all the way to 7,000. Like to me, it was like it was a big drop. So I thought, okay, so it's gonna probably go 50% up, and then it's gonna drop again after that. But it went all the way to 7,000. So basically, I missed out on another 50% of the move. Which is okay. I'm just trying to like get as close as possible to the full move,
Yeah, and there will be other days when you did exactly what you did and it was perfect. What if that was the absolute top?
Yeah.
So one of the ways that I like to do this is have your major targets in mind, and it makes sense. You got resistance here, just looking to the left, right? It makes sense to take it off right there.
Exactly.
But then once you take it off, once it hits the target, don't take off the whole position. Take off maybe 80% of your position. And then you can watch it in this area. And if you're seeing that it looks like it wants to continue, let's say you entered somewhere here, you took off 80%. And if it wants to continue, you can add back in a lot and still have a stop at the break-even zone. And your new break-even, make it in this area. Add such that your new break-even is here. So let's say you got in with, let's just call it 100 shares, 100 contracts, and you take off 80 contracts. So you still have 20 contracts. The price is in this area. You have 20 contracts, and your break-even is down here. If you add another 20 contracts up here, your break-even now is just here. You can realistically add another 20 on top of that. Now you're up to 60 contracts, and your break-even is just about in this area. You're still keeping your stop at break-even over here. You have no risk on the table, but instead of having just 20 contracts to run, now you have 60 contracts to run. So that's just a matter of recycling your position, but not putting on any risk.
Yeah. But here's the thing. My target was hit on the third green arrow. Sorry, candle to the left.
Okay.
More to the left. More to the left. Yeah, more to the left. That one.
Yeah, this one.
So like this is where it hit. So let's say I got out. I got out 80% of the position, right? So I left with 20%. And my stop loss at this point would be break even, or would I? Because like what I'm saying is that those two candles after, they would probably freak me out, and I would get out anyway.
Yeah, so here's the thing. Depending on where your entry is, if your entry was here, yes, it would have got you.
No, my entry was after the first 30. Actually, if you can look at the 15-minute, the 15-minute looks much better.
Okay. Right. Wow, 15-minute. I haven't looked at a 15-minute chart in a long time.
Because what happened is like that 15-minute was that one, the second one was like looked so good for confirmation of a reversal, like on the bottom. So so I tried to get in after that.
Yeah. Listen, I think you're just overthinking it, really. Once you enter,
I probably am.
Yeah. Just once you enter, let's say your entry is here, this thing starts to go in your favor. You bring your stop at a break even. Before it even gets close to your target, it's already at break even.
Yeah.
And you're totally risk free. Your job for the day is done. It either hits your target or it doesn't. And that's all there is. So it hits your target, it messes around. You can watch it in this area after your trade is done. Remember, once it hits your major target, you've taken off the majority of your position. For you, your work is done for the day. Everything else after that is just bonus. And so if you're going to get some bonus, make sure it's risk-free. So let's say you watch it drop. You're still holding on to that tiny position that can last 20 contracts. You watch it go back up. You're thinking here, maybe it looks like it'll continue. You're catching your breakout ABCD, whatever you like to look at. So you can add back in 20 more contracts. Now, instead of your break even being here, now you're up in this area somewhere.
Yeah.
And that's it. No big deal. Then let it run for the rest.
Yeah.
Just keep it very simple.
Yeah. I think it's important to keep those 20%, because once you're out completely, it's very, very hard to have another trade.
Yeah.
Because like psychologically, you're like, do I want to mess up the good trade that I had? Yeah. But when you have the 20%, adding to it is much easier psychologically. Like you're still in the trade, it's still going in your direction.
Yep, you're still in it, and once you have something that's still on, it's actually simple to add to it psychologically.
Exactly.
Without putting risk on.
Yeah.
You can just break even up, and I can tell you so many times where I've made money on a trade that worked as planned, as it hit the target, but then doing this where it just wanted to go more, so I added back more, and I ended up making double the money.
Exactly.
Just on adding without risk. That's the beauty of it. You're not opening a new trade, because again, like you said, that's a psychological issue. Adding putting on new risk. You don't want to do all that.
Exactly. Like once you put if it's a completely new trade, and you start seeing that like you're putting risk on, you're already taking from the first trade, and it's hard to keep and to know where to get out and where to put stop loss, and it messes with you.
Yep, exactly. So there you go. minimize the risk. Your job is risk management. Put on the risk, minimize the risk, and then maximize the position. Simple enough. So you got it, man. You know what to do.
That was a good trade, man. You can't be upset you didn't get the whole move. I mean, that's a
Yeah,
it's pretty-
I know, but it's just so many times that I messed up my good trade by looking at it and seeing that it went another, like I could have doubled my money, and then I start making another trade, and at that point, my psychology is not there, and I'm not thinking straight, and I lose everything I make on the first trade. So like I'm trying to find that, psychological golden point level where I'm feeling good about the trade and I'm still in the trade. So even if those 20% went to 7,000, I would have been happy with the trade, and I would have been happy with the day.
You want to double your money? Go out of the money contracts options and go heavy. Go really heavy. Full buying power. See what happens.
we've all been there, it seems. Don't worry, man. We've all been there. Called greed. That's what it's called. Called greed on the screen.
Learning, yeah.
Great trade, man.
Nice, yeah. Good
Thanks.
stuff. All right, guys. I need to get my kids to school in the next 10 minutes, so time to go. What we got here in the chat? Target is it? Yeah, Dustin, there you go. You're risk-free. Amount of satisfaction you get in risk-free trade is unexplainable. That's awesome. Cool. All right, guys. Good fun. Cool. Always enjoyable hanging out with you guys before sunrise. And so again, it's Thursday for you guys. The market will open, usual thing. I don't plan to be here at the open on Friday, but if I'm around, I'll pop in, see what happens. Other than that, I'll get all these recordings sorted out and up on our channel.
Thank you, man.
Thank you, Avi.
Yeah,
Appreciate it.
it's a pleasure.
Thanks, Avi.
Thank you, Avi.
Thanks, Avi.
Sorry, have a good day.
Have a good day.
Take care.
Take care, all. Bye bye.